Sean Haney here with RealAgriculture.com and Real Ag Radio, Rural Radio 147, Sirius XM. Let's talk markets here on Real Agriculture. We're joined right now by Brian Voth of Intellifarm, based out of Manitoba. Hey, Brian, how are you doing?
Hey, Sean, I'm good. How are you?
I'm doing pretty good. Okay, trying to make some sense here of what's going on with some of these Western Canadian crops. Of course, canola and spring wheat, and obviously there's a lot of others. But let's kind of start there. What do you make of this right now in terms of what you're seeing from a fundamental standpoint?
Well, I guess first off, we're still on the 2021 hangover effects from the market standpoint. And probably that's where you got to start, because the thing to remember is just how high some of these markets, and take canola for example, getting up to $1,200 or whatever it was back in 2021, just how high the market went. And especially if you think relative to anything historically, it was just through the roof. And the important thing to remember about the price is that it rationed a lot of demand, and it needed to, because 2021's crop was just so pitiful, right? So it rationed that demand, and not all of that demand has still come back into the market yet either. And this year is going to be a case in point as to why it can't, because again, we're going to have a smaller crop. We're not anywhere close to 2021 though yet, I don't think. Okay. And so we don't need to ration demand like we did in 2021. But the other thing to remember is that all of the demand that we had prior to 2021, roughly 21 million tons of demand on canola a year, that hasn't come back into the market. So not only do we not have quite as dire a situation as 2021, but we also don't have as much demand to ration in the first place. So just look at canola today, just around $800 a ton or whatever. Think back prior to 2021, the highest prices we'd ever hit was 700 or right around $700 a ton on a spike. So we're still, from a historical standpoint, way higher on values than we ever have been before. And I think back at the end of May, when prices bottomed out, we were overdone to the downside at that point. There was no weather premium in the market whatsoever. So, and now the weather that we've had over the summer is why we needed to have some of that premium come back into the market again. But I think, 2 weeks ago, where we peaked out at 850 was also overdone to the upside now. So I think our equilibrium price is somewhere between those two numbers at this point. And nobody's going to want to hear this next statement, but I still think longer term, we're going lower than where we've seen in the last couple of months.
Why do you have to say that? Why would you bring that here?
So, hey, I prefaced it by saying no one's going to want to hear it, at least. But
okay, so give me the why of that. Is it a case of we're at 800 on canola, we're at price levels where we are really making the market, like we're really questioning the demand side of the equation? Because a lot of farmers are continue to talk about the supply side and the fact that the production number is really in question, but it's not good. It's not 2022. You made the comment it's not quite 2021, but it's definitely not 22. So give us a little bit more reasoning on why you think we're probably going lower from here.
Yeah, and it's like you said, the supply side is the one that people tend to go to and focus on, because it's acres and it's yield. And it's out of anything an easier one to figure out. Demand is always a lagging thing, and it's tough it's always an after the fact kind of thing that goes back and substantiates what's happened. But again, how much demand got rationed, you got to remember, we basically cut demand in half, or maybe 60% of normal in 2021. And some of those buyers went and found alternate sources like Australia, like European rapeseed, for example. And it hasn't all come back into the market. And these high prices, and especially if you look at canola relative to European rapeseed values or Australian canola values, we've been at the highest premiums for the last 2 years. So it's not like canola prices have encouraged demand to come back to Canada either. And that actually applies to North American grain prices as a whole. We've been basically an island of high-priced grain that nobody really wants to buy. They'll buy it if there is no other option, but right now there are still other options. And so I think longer term, we're still going to have to come back down to a reality price. Or the flip side, I guess, would be that other values around the world would have to climb up to make us more competitive again. But if you're the one outlier has a high price, it's unlikely that everyone else is going to come up to that price. It's more your price is going to have to come down to where everyone else's is.
Do you feel the same about spring wheat?
To an extent, yes, because again, North American wheat values are just high relative to Russian values, even South American wheat to an extent, but not. There's a whole different aspect when it comes to wheat, obviously, because of the Black Sea issues and what's going on there, and that is a massive, massive unknown. Um, if Russia can continue to ship wheat at the low values that they've been doing, that's still going to continue to rule the market. If that starts to change, or this tit for tat bombing of ports and whatever else keeps going, and it starts slowing down shipments coming out of there, well, then the rest of the world's going to have to start picking up the pace, and at that point, probably prices will start to go up because it gets way more expensive to start shipping out of other areas than the Black Sea area. So it's not so much about what our production is here in our backyard, and I think that's the important thing to look at. Like you said, it's a supply and demand sheet, not just a supply sheet. And the demand side is what's been lagging for basically the last year, 2 years already.
Yeah, but yeah, so that makes sense to me. When you look at, you're talking to your clients. I know you get out in the truck and you drive and look at some of the production fields yourself. What do you see in terms of production? Because I feel this is really hard to put. It's easy to say, oh, 2021. I'm like you. I don't believe we're at 21, but we're somewhere in the middle of 22 and 21. But I think with every passing day or week, and I don't want to be dramatic about it, we sort of inch a little closer to 21. The question is just how close will we actually get? What are your thoughts?
Yeah, the one thing about 2021 is it was just kind of bad across the board. Whereas this year, people have asked like, oh, well, what does the crop look like? I'm like, well, which side of the road are you looking at?
Yeah, it's variable.
Because, when you look at the patterns of the thunderstorms and the rainstorms that have gone through, the places that have had rain actually look pretty good. And that can be vastly different than the field on the other side of the road or a mile down the road where they got nothing and it's just burnt up. So that's making it really tough. And I've seen other analysts talk about this too. It is making it extremely tough to try and figure out what is an actual average yield. It's hard to figure out an average yield on one farm right now with geographically being spread out. It is super hard to try and figure this out on a Western Canada basis. Yeah. Like, what's the canola yield on one farm in Manitoba or one farm in Saskatchewan? But then extrapolate that to what's the canola yield across Western Canada? It's really tough. And we've been dropping our numbers a fair bit, as have a lot of other places as well. But even with going down to, let's just say, an average of a 34, 35 bushel canola yield, instead of a long-term average is 41 and a half. Going down to a mid 30s number obviously takes production down a chunk, but again, still 3-4 million tons higher than 2021 at this point. So it's, again, it's like you said, we are between 21 and 22 right now, and that's fine. Again, it's the demand side that has been lagging.
Okay, so let's talk about that lagging demand. Is that mostly driven by China? And right now the news cycle talking a lot about a deflationary environment in China and concerns about China. Is it just a China story then?
That's obviously a big driver, and because of their import volume, it's one that you can't ignore. But I think the other thing is just that overall demand, with this inflationary environment over 16 months or so that we've been in, consumers are just spending less. And obviously that only works to a certain point because there's core things that you have to buy. But now when you look at it, like the staples, when you look at, wheat, rice, these kind of staples that are staples around the world, those core things are still going up in value, or going up in price, I should say. And so if your income is not following suit, which probably nobody's is relative to what inflation is, the reality is you just can't buy as much stuff. And I think that's the bigger problem. Like I said, China's always a big question mark, and it's always one that you know, kind of highlight a little bit, because they can have some pretty big influences one way or the other, but whether they're buying or not. But it's not just China at this point, I don't think. To me, it's consumers around the world are spending less money on things because there's just less money to spend. And I don't see these interest rates coming back down anytime soon. So is this just kind of the new environment that we're in now, where it's going to lead to less demand overall? It's a thing we haven't had to think about in what, 15, 16, 17 years, something like that. Like, we've been in this low interest rate environment for so long that this is really shifting the landscape a lot.
Last week when we talked about the, what happens in a weather market, or what can happen in a weather market when that weather market, goes away for, whatever reason, it can happen quite quickly. One of the numbers that Chip Flory from AgriTalk threw out last week when we talked to him about the markets here on the Wednesday show was, Dees corn, right now it's at 497. I've had a few analysts, including Chip, say, yeah, watch for it at 425. Is that something that you would buy into?
I've got a slightly lower number than that in mind, but yes.
Okay, well, what do you think then?
And this is from a technical standpoint. There are
Okay.
some patterns on that December corn chart that are actually pointing to like a 388 number.
Well, that would be not good.
Well, I mean, whether it's 425 or it's 388, it might be kind of arbitrary at that point. I'm not sure. But that's just, but if you look back long term, the old highs, so from 2014 till 2020, the old highs on that corn chart were in the 4 to low 4 numbers. So, I've been thinking about this for the last year and a half, and I'm pretty sure if we look back on our interviews, you'd see this too. The old highs often become the new lows when you've gone through this transition period, kind of like, 07, 08, 09, like 2011, 12, 13. When we came back down off of those highs, we started trading a new range. And the bottom end of the range was the top end of the prior range. And that's actually matches up on a lot of these charts right now where some of these signals are showing. So do I think that there's still lower values ahead of us? Yeah. Again, it's hard to get your head wrapped around this when you're looking outside and you see like, oh, my crop looks like total crap and there's just nothing there. But again, this is where that's easy to look at the supply side and say that. But if you have a crappy crop that nobody wants to buy, does it really matter if it's a crappy crop? So the other thing to think about, and there's been a lot of comparisons to 2012 from a weather aspect, right?
Yeah.
But so I've asked a lot of people, I'm like, hey, let's compare this to 2012. Arguably, the 2012 drought was far worse than what we're looking at today. But I said, that aside, when did the markets peak out in 2012? And most people can't answer that question. And the answer is corn peaked out in August of 2012 and beans peaked out in beginning September of 2012. So it was a small crop. It was a massive, massive drought. And yet the markets peaked out prior to harvest and never went back to those levels.
Do you think there is still, as you look at some of the numbers, the 22 carryout, is there still inventory yet to be marketed at this point?
There is. It's less so on the soybean side, but when you look at the projected balance sheets for this, if you want to include this year, corn has the potential to be very burdensome. Soybeans less so, because the carryout is just a tighter number. But the other thing to keep in mind is that, unlike in 2012, where we had a massive drought in North America, there'd been a huge drought in South America the year before. So globally stocks were down everywhere. So basically, if someone wanted to buy, they didn't really have a lot of options as to where to get this. We're coming off of a record crop in South America, earlier February, whatever, and now followed by a drought crop in North America. There are other supplies around the world to pick from right now. So that's another difference between 2012 and this year. And there's that marketing saying short crop, long tail, and that was back in 2012 was exactly what happened. The market rallied up quite substantially early, and that essentially curbed demand right there. And the market kind of trailed off the whole rest of the crop year because it went high enough to get rid of enough demand up front that we could string that crop out through the rest of the year, make it through no problem, and away we go. Whether or not that's a repeat of what we're going to see this year or not, that has been on my mind for a long time already, actually. So,
like, there are happy bears and there's grumpy bears. Like Yogi was a really happy bear, right? He didn't kind of know what he was doing half the time, and it's a good thing he had Boo Boo. But you're a grizzly, dude. What's going on?
Okay, go back after how many of our interviews, and this has been weird for me. I am always the bullish, optimistic guy. And the last year and a half or whatever, I have been this, I don't say I'm negative, but I'm bearish on prices. And I've been that way for a long time. And it's been really weird for me to wrap my head around this because it's just not how I normally am. But, it's like I said, like that. And I vividly recall one of our interviews, and you're like, oh, you said you've been getting analysts on, and people were kind of at the high there a year and a half ago. And it was like, oh, people are slowly starting to turn bearish. And then there's you, and you're just like, nope, prices are going down. And I'm like, yeah, this is weird for me too, believe me. But
well, here's to say I hope you're wrong, but I think there's a lot of realities there that people definitely need to chew on and protect themselves from a risk management standpoint for sure. No matter what, whether it's reality or it's not. Obviously, time will tell. But risk management, key piece of all this.
Well, and just like 2021, this turned into a great summer to use futures and options as part of your marketing strategy because it was too risky to necessarily go and sell crop out of the field with the weather the way it was.
Yeah.
So again, it worked out as a great strategy for those that have the opportunity or have the accounts to do it. Highlighted a great reason to explain this to farms too, as to why I think it's so important to have that account and expand your marketing opportunities than just selling to an elevator all the time.
Hey, Brian, really appreciate it. If somebody wants some information and we'll talk to you about Intellifarm and some of the services you provide, how do they find you?
Easiest way, just go online, intellifarm.ca. There's a contact us page there, and you can shoot us a message, or our phone numbers are on there too.
Great stuff. Hey, Brian, thanks so much.
Okay, thanks, Sean.